Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. This episode is sponsored by Is Ott Academy's online course, How to Start Building Your Wealth Investing in the Stock Market. I wrote this course for those who want to go from feeling frustrated, intimidated, or overwhelmed by the stock market to becoming confident and in control of their financial future. Go to myworstinvestmentever.com/deals to claim your discount now. Fellow risk takers, this is your worst podcast host, Andrew Stotts, and I'm here with featured guest Marcus Luer. Marcus, are you ready to rock?
Yes. Good morning, Andrew, and I'm ready to go.
All right. Well, let me introduce you to the audience. Marcus Luer is Asia's #1 sports marketing entrepreneur and the group CEO of Total Sports Asia, which is Asia's global sports marketing agency, which he founded 23 years ago in Kuala Lumpur, Malaysia. Marcus is a sought-after industry expert and speaker and has been featured on CNBC, BBC News, Bloomberg Asia, regularly presents at major global sports conferences, and has contributed to many international newspapers and industry magazine articles. He's recently launched his Sports Entrepreneurs podcast series, and just type that in and you'll be able to pull it up. I was just listening to it this morning, featuring top sports executives and entrepreneurs from around the world. Marcus, take a moment and fill in further tidbits about your life.
Yeah, thank you. Well, I'm excited to be here and sharing a bit my stories. As I said, normally I do it the other way around. I do the hosting, but it's always fun to share some of my stories too. And maybe the short summary is originally from Germany, grew up in Cologne, ended up studying in the United States, did my MBA there, and was fortunate enough to be around in the US during the Football World Cup, the 1994 FIFA World Cup, which the US hosted. And the city I was studying was in Fort Worth in Dallas, Texas, which is nearby, which was one of the main venues. And so I volunteered, ended up with a job there. And, as you do when you do an MBA, you do internships, etc. So during those times, I landed in the world of sports with American Airlines and a few other companies then. And so I got in this, and I think once you taste the sort of the amazing world of sports, the energy it brings, being a sportsman, I've always been a sports guy in my whole life. I realized this was my calling because I realized I would be doing this for free if it's possible, without having to get paid. Or I was always amazed that someone would pay me even for what I was doing. So that's how really I got into the industry. And then interesting enough, my first job ended up here in Asia. When I say first job, after the Football World Cup, where I did work at, I landed a job in Hong Kong. So I got on a boat, so to speak, and arrived in Hong Kong in 1994, later part of 94, and have never left. So I've been in Asia for 26 years. The majority of that has been based out of Malaysia, whereas the head office of the company and let's say my first home, although now we're here, a fellow Bangkokan here sitting with you just around the corner from you. And so that's the short version of what I've done there.
Interesting. I came to Asia in 1992, so we both arrived on the shores of Asia, in those early days.
Yeah, early days.
And I never left also.
Correct. So
one of the things I was thinking about, about sports that's interesting is that I'm a passionate guy about finance, and I've studied everything I could about it. I read everything I could about it. I taught everything I could about it, and I worked in the industry, and I just threw my life into it because I just found it so fascinating and so many things. And, I have a friend of mine, and she was a ballerina at a young age and has devoted a lot of her youth to that. And one time she said to me, "Man, you're a workaholic." And I said, "You're a ballerina-aholic." She's like, "What?" I'm like, when you pursue your passion in sports and you push yourself hard and you do the training and you go through it, people really admire that. The discipline, the struggle, the pain.
Yeah, yeah.
But when you're pursuing your passion in another field, like the field of business, and you're truly doing it because you're passionate, you're not just working long hours because the boss told you you got to get this done. But I was pursuing my passion. They would
Hmm.
call me a workaholic, and I just found that offensive. So I'm going to say to all the listeners out there who love what they're doing, let's call ourselves sportsmen and women.
Hmm. Yeah, that's true. And I absolutely. I mean, I have a huge passion for what I do, and I don't feel I'm working. Yes, it is work many times, of course. There's never, nothing always works perfectly, right? So business is business. But in terms of being in a business where you have a passion for, and in your case, if it's finance, in my case, it's sports, or now, also the world of gaming and esports, which we really, aggressively going after. Those are things which, as I said, it's fun. You having fun while obviously building a business and making money and everything in between.
Mm. Well, now it's time to share your worst investment ever. And since no one ever goes into their worst investment thinking it will be, tell us a bit about the circumstance leading up to it and then tell us your story.
Sure, sure. Yeah, and worst, let's call it in brackets, right? It is, it's, I think it's a painful investment, and then a painful learning on the back of it. That's probably how I would describe it. And that is a company called SportsFix, which was our OTT platform we launched in the sort of later part of 2017.
What is OTT?
Yeah, OTT stands for over the top delivery, or over the top. So it's a technical term in the internet space or in the digital space. And OTT really, a few years ago, the best OTT example is Netflix, which probably most people would recognize, right? That means it's delivered to your device, whatever it is, right, over the internet. So that's what OTT means. Now people use it in multiple levels, but at the time, really, it was always kind of referred to the television side of it, rather than you have a set-top box at home, or you get a whatever old television signal from a terrestrial network through your antenna. This is now delivered, right? So when Netflix started, around the world, everyone was looking at how would that impact sports, and where would be the next Netflix of sports. That's really, and this is what most of us call, we called ourselves that, and others, of course, because it was easy for someone to get their head around. Okay, so I watch movies, so now I can watch sports. But the same thing, it's streamed, and I can be on any device and on any platform out there. So this is sort of where we started, right? To me, being in a broker trader, in the world of sports and sports TV rights, this was very obvious was the next big thing. And for us, it was an opportunity to get away from just, again, being the trading side of it, where it's just a pure arbitrage game, right? I buy something for $1, I sell for $1.20, or I represent a rights holder and would sell it to a broadcaster. So here was the opportunity to say, hey, you know what? We can be a broadcaster. We can be the guy who puts the content out there. But instead of having to find $100 million to do this, which is what you would need if you try to build a traditional broadcast platform, you can do it for single digits, right? And that's the opportunity, because the cost of building an OTT platform is a fraction of let's call it, building a full-on TV station. So that's how it all started, right? I felt this was the place. I knew the industry. I know where to buy content. I knew where to, I knew what the audience was looking for, because we've been selling to, of course, the industry for 20 years at that time. So it all seemed to be coming together.
I want to invest with you right now.
Exactly. So, as I said, so we ticked every box you can somewhat think of. It was the hot thing, and everything in between. So this is how it started, and this is why it was clearly a good idea. And until today, I think it is a good idea. But it also, as usual, we've all learned a few things, which I'll come to maybe later. Why or what went wrong, and what we did wrong there, right? So we did launch the platform. We put a team together. We threw some of our own money at it, and we also started to do some fundraising of external parties. So we brought some external investors into it, because, as you said, it was a great story. It wasn't that complicated for someone to get their head around that. Okay, if you can be a Netflix of sports in Asia, even forget about the rest of the world.
Right.
Why wouldn't that work, right? So we got up and running, built a team up very quickly, probably up to almost 20, 30 people at one point in time. based out of KL. And we launched the platform somewhat late, early 2018, I think, in Malaysia first, and then sort of another probably 6, 7, 8 months later in Indonesia. So, but when that's coming back to what then happened is that as much as the concept and the idea made all the sense in the world, we probably didn't know a few things yet at that time, and that's part of the learnings, I guess, coming out of it. Number one, we didn't really understand the consumption habit yet in Asia or in our part of the world here, of how people actually consume online content, and there is a huge difference. The consumer who buys a set-top box and watches watches whatever at home, whether you're in Thailand, you have True, or in Malaysia, you have, Astro and whatever. You are committing whatever it is, X dollars every month, right? And you kind of used to that idea, right? And that's our generation, who we were brought up with pay TV being a cool thing, meaning, hey, I got 200 channels now, right? Before I just had a few whatever free to air channels, and half the time it never showed what I wanted.
Even though we only watched 1 or 2 of those most of the time.
Exactly. That's the sort of that's where it's heading now. But when you come from a free to air world, which was a few channels and always all this sort of random stuff, right? And now you have a channel you can only watch movies, or only sports, or only Discovery Channel, or only CNN, or whatever. That made a lot of sense at that time, right? This is 20 years ago when that industry started and took off in many parts around the world. Thailand is probably not such a good example because True never really launched in a big way here, or never got out of the starting block, in my view. But so that was the industry you're coming from. Now it was very clear the world was unbundling. People weren't that interested anymore in saying, I have 200 channels because I'm only watching 2 of them. Why am I spending $100 on it, right? So the concept of it's $1 a channel, and therefore, okay, not that much. But if you only watch 2 or 3, then that $100 gets expensive, right? For 2 or 3 channels. So that's where Netflix and of course everyone that came into play. The challenge with Asia was that most people, when it comes to online, they expect things to be for free because it's on the internet, right? So yes, if they have a box and have this and that, fine. There's still pirated boxes out there, and that's part of the challenge actually True had here in Thailand, that too many pirated boxes were here. But the internet is full of pirates, and just about every single stream you can find in some fashion, right? And so that was killer number one, that we didn't realize there was a huge amount of piracy out there, which we weren't able to stop, right? And if you're a bit clever, you might be able to find it, even though, of course, we had it, for us, it was just a click away thing. That's one. Second was, again, that people, as I said, weren't quite as ready to, sign up and pay for things, because there is just so much free content out there, right? YouTube is full of it, and Twitch, and God knows these platforms there where that generation is, right? So that is, I think, where we realized, okay, we had to shift the model away from subscription model, which is what we initially thought was the trick, to a more, we would call, ad-driven model, right? And that to some degree can work, but it's a very different model because the numbers, automatically, become very different. So we had to, so we were constantly pivoting and changing the model. And if you look at other platforms similar here in Asia, like iFlix, which is probably was one of the largest at one point in time, not in sports, but they obviously were trying to be the Netflix of Asia. They did the same, right? They were constantly changing. Patrick, a good friend of mine who launched it and is one of the founders there, they raised $360 million and sort of burned most of it, right? We raised about 1% of that, but we burned that as well. and so, but the story is very similar, right? So we were constantly rechanging and rejigging the business model, while we are looking for, the concept worked. It's not that we weren't attracting large audiences, but we weren't able to monetize it. That is probably one of the bigger learnings of it, is that it took us too long to get to the point where, investors and others were saying, I could see the model working. Right? And so, and in the short sense, then we ran out of money, basically, right? In the process there, that, but the learnings, I would say, of how did we run out of money, were a couple of things. One is, I think we got distracted. And the distraction, unfortunately, was again, if you listen to it, you go, okay, that made sense, but in hindsight, maybe it didn't. If you recall, 2018 was the craze of blockchain and ICOs around the world, right?
Yep.
So everyone was all of a sudden in this sort of concept of, wow, there's a lot of money out there. You can raise a lot of money through an ICO, initial coin offering. And so we went, you know what? Let's have a look at this, right? Because all of our buddies were going, hey, I'm running and doing an ICO and I've raised 10 million here and 20 million there, whatever. So it just seemed to be an obvious one. So we said, okay, how do we integrate blockchain technology into an OTT platform? There is some logic to it, but it wasn't the most obvious right away either. So we spent a good 6 months drafting this incredible white paper, sunk a lot of resources and time and energy into it, because we convinced, of course, ourselves that this was the place, right? And so we called ourselves the first OTT platform on blockchain. Until today, we probably have had one of the better white papers out there, which had a chance of, I think, to actually succeed. But what happened, it took too long. Right? By the time we actually wrote it, we were in the middle of 2018 and the blockchain bubble had burst, or the ICO bubble at least had burst, right? They, if you go the numbers, there were billions of dollars were being raised, and all of a sudden it literally just tanked. No one was raising anymore, and the only ones who were raising still were existing ICOs, where people just topping up and trying to sort of save themselves, or hoping that by doubling up on one thing it would work, right? So we never raised pretty much $1 on the back of it, but in the process had taken off, I think, our eyes too much off a traditional fundraising, as in bringing, let's call it traditional equity investor, other sort of investors in, one, and two, of the product a bit as well, because the whole tech team was now cracking how we would integrate blockchain into an OTT platform. The part which then came out of it, which was really interesting, is that it's not we needed blockchain, but it added an interesting component, and that was actually the tokenization part of it, right? And tokenizing an asset it's a very clever thing to do, and so we learned a ton of things in that area, which I think in a future business still it will come back to it, because tokenization, I think, is really an incredible area of generating new revenue streams, or raising money, I guess, if you could tokenize something. Yep. That's one. So I have tons of ideas coming out of that, and that's, I think, we all always do. I think when you have a painful lesson, you learn something, of course, right? And that's
maybe
where
we should list out. How about if we go through, what did you learn from this experience?
Yeah, so I think the couple of key learnings will be, first of all, as I think alluded to already, not taking your eye too far off the ball and sticking, through. Maybe pivoting is important, but I think you also got to watch you don't distract yourself too much, probably, and that sort of would be one thing. Secondly, the sort of, I think we were a bit too aggressive in our growth strategy, instead of maybe making it work in a couple of territories first, or even one territory. So I've seen now over the years in my own business and in others as well, is that you do need a strong foundation, right? And I always look at, if you take successful platforms like the UFC or the Premier League, or whatever, pick a major event in the world, they're always very strong in their home market, right? That's where they grow from. If your home market is weak, or you haven't really cracked the home market, you're trying to go global right away, it's very hard to do. And there's other investments I have in a similar fashion, where I realized that was one of the big mistakes we made, is that I have this sort of global view, or a very Asian regional view on a lot of things. And that makes sense when you do it well in one country and then you multiply it. So every time I did that, where I've was successful with a particular product, or with a concept, with an idea in one country, and it worked, and then we multiply it. That makes sense, right? Because then you have the leverage there. But if you haven't cracked the first one yet, and then you're going, but let's see whether this might work regionally better, I think that's where the challenge comes from, right? And so that is where I would say is the lesson here as well. We were too quick, too fast. We didn't have that opportunity to to really learn it maybe in one or two countries first,
Right.
and we were already off to the next thing. And again, and partially it was because we were watching others. That's what iFlix was doing, right? They were always doubling up, running to the next place, always with the assumption, hey, then there is new viewers or there are more customers out there, rather than just focusing on the first market first. So those are, I think, a few
Wow.
things. Too aggressive,
Mm.
losing a bit focus. And then, of course, at the end of the day, if you don't have enough funding and or you don't have enough, I guess if your runway isn't long enough, then you are going to run out of space, run out
Yep.
of time and or resources eventually, right?
Yep. So let me summarize what I took away. I mean, in fact, I wrote down a lot of things from your story, and I'm just going to run through them really quickly. And the first one is pivot. I think the best way to think about pivoting in a business is think about a compass. Remember in school when we put down a compass and then we twisted it around to make a circle? A compass pivots on a point. The pivot. So in other words, keep one foot in what you're doing and pivot a little bit. But a lot of times what happens is that we start off a business and we chase the revenue, and next thing you know, we're in a completely different space. So be careful about pivoting. Pivoting is just usually mildly altering your idea.
Sure.
And it could just be that your idea is bad, and therefore you shouldn't really pivot from it. You should go get another idea. The second one is the idea of resource allocation. And, it's the biggest challenge of any entrepreneur is you have very limited resources. Where are you going to put them? And your ultimate success or failure is going to be dependent on you at the top and how you allocate those resources. And that's such a challenge.
Yep.
The next one is the idea of test the market. It's just the best bit of information that comes out of this discussion, as well as many others, is test your product and just test and work with the market, make a small group of people super satisfied, and then start to expand. The next one is, it's actually similar to a failure that I had, which was that I was a stockbroker, an analyst at a stock brokerage house, and I did that for years as a head of research. And I had fans around the world of fund managers who read my research, talked to me, and I gave them advice, and my advice was good. So I thought, I'll set up my own company and I'll sell my research to them, And what I learned is that when there is a fire hose of free research coming from all of these different sources, which are brokers and investment banks, you can't get somebody to pay a reasonable amount that you can build a reasonable business out of that. It's very hard. So competing against free is hard, very hard. And, I would say the other thing it reminds me of is my worst investment ever was an investment in a startup also. And what I realized was that, okay, there was a point in time where I realized, holy crap, we have to go big or go home.
Yep.
And what I meant by going big is we need to raise $3 to $5 million minimum to go to the next stage. And are we ready to do that? And the answer at that point was, no, we're not ready. And we shut it down. And then the last thing, you talked about is runway. And I always say that there's two runways. Runway number one is a financial runway, that you have the funds to execute your idea. And runway number two is a confidence runway, where the people who bet on you initially, eventually, if you don't turn it into something valuable, they will lose confidence. And it doesn't matter if you have money if you don't have confidence. But if you have confidence and you don't have money, you can probably work something out. So anyways, a lot that I took away from is there anything you'd add for that?
No, I think you covered well. It's like I said, it's really always a combo of things. And when you're right in the middle of it, of course, that's the harder part, right? Now, this is a couple of years back when all this unfolded, and so the company, as I said, we had to shut it down in sort of beginning of 2019. So it's now almost a good close to 2 years back since it all happened. But when I was really in the middle of it, it was painful. It was, and you're not focusing on the lessons. You just, dealing with the damage and putting out the fires, and so only, I think, yes, sort of a year or two later, I think, is when you then really have the opportunity
Hindsight is 2020.
Yeah, totally.
So that leads into the next question, which is based on what you learned from this story and what you continue to learn. What one action would you recommend our listeners take to avoid suffering the same fate? Let's go back in time. What would have helped you?
Well, like I said, I've started many companies in some sense, or a business project within our own company, right? So it's not always that it was a standalone business as this one was. Most of the time it would be in a project within the company itself, right? And so within it, the company was always existing. We were just investing some money in a particular project. If that didn't work, we shut the project down and we moved on, right? The business continued. Maybe that just knocked the profitability for the year a bit, but it wasn't killing the company, right? So I guess I'd never had that type of experience of what it means to really go through a business which then looks like it's going to fail, and we can't keep bailing it out, right? Because we were just throwing more money at it, and we're draining the mothership in a sense, right? So the mother started to catch fire from the from the house next door, and so that was an interesting one. Which again, here's an analogy which I used, and I had to really switch it in my head, and that is, I called Sports6 was my baby. Okay. Ooh, that's a bad analogy if you're trying to separate yourself from something, right? As an entrepreneur, if you call your business your baby, I think you're in trouble already, right? Because it means you're going to do whatever it takes to save it, right? As you would with a real child. Now that's, again, it's a good thing in many ways, right? And we can all see the positive of that, but you can also see the negative, right? Because you're going to just try to hang on to it, right? And you're drowning theoretically with it. And that's sort of then what I had to kind of switch the analogy, saying, okay, we need to rescue our baby, to, okay, we had a, whatever, there's a next door, we created another house, but that house is on fire. If we don't put that fire out, we're going to catch, the main house is going to catch fire, which was, TSA as a group, and which to some degree actually what happened, right? So we were draining the resources there, and all the money we were making here, we were throwing it at the next thing, right? But I said there was an interesting mind. I had to really stop calling things and putting these more emotions to it than you already have, as any business entrepreneur has with their idea or with a concept, to say, look, you know what, it isn't working, and we will have to go that more brutal route of shutting things down, right?
Hey, baby, it's not your baby.
Yeah, correct.
So, last question. What's your number one goal for the next 12 months?
Number one goal for the next 12 months. Well, look, we've all coming out of an incredible, crazy, 2020. I don't see 2021 being that different in many ways. I do believe we're going to see continuous restrictions on travel and many other things. So again, without overusing the word pivoting here, but as a company, we've very heavily focused on the world of esports or gaming, which is growing dramatically, and all the sort of trajectory you already had in before COVID is just accelerating because you have more people at home. So there is a whole lot more folks playing games now in between, or even there's more focus on the industry, right? So we're now bringing this 25 years of experience in sports into the world of esports and gaming. And there's some amazing new things we're doing in the Middle East and here in Asia. So that's probably my big focus. I think that's the space I love. Again, very natural progression of what we're doing already. Our job has always been to generate revenue streams for sports. That's what we've done, $500 million worth of those. So my goal is, and I've declared that publicly, to try to find the next billion in the next 10 years. So it took us 20 years to find $500 million revenue for sports. So the goal is to find $1 billion in the next 10. So 2x Beautiful. On both ends.
Beautiful. All right, listeners, there you have it. Another story of loss to keep you winning. Remember to go to myworstinvestmentever.com/deals to claim your discount on my How to Start Building Your Wealth Investing in the Stock Market course. As we conclude, Marcus, I want to thank you again for coming on the show. And on behalf of Is Ott's Academy, I hereby award you alumni status for
All
turning
right.
your worst
Thank you.
investment ever into your best teaching moment. Do you have any parting words for the audience?
No, look, thanks for being on here. And it's always good to reflect. It forces you to think about what happened really in a different way when you have to explain it to others. And I've done it a few times now to myself, but yeah, it was good and appreciate it. And hopefully there's some learning for everyone.
I think we all learn. And just looking at the notes that I've taken down, you definitely have helped me. So I appreciate that. And that's a wrap on another great story to help us create, grow, and most importantly, protect our wealth. Fellow risk takers, this is your worst podcast host, Andrew Stotts, saying, I'll see you on the upside.